Hi, all dear listeners. Welcome to the new episode of my podcast, A Digital Tomorrow. I'm joined today by Henri Arslanian. Henry is, as you know, a very famous person in this world of cryptocurrencies, fintech, DeFi. Henry recently founded the company Asset, uh, Nine Blocks Capital Management, sorry. And well, he is also teaching at HKU. He has a podcast as well. He has like over 500,000 followers on LinkedIn. So he's written bestsellers as well. So I'm sure all of you know Henry already, but in case you don't, here's Henry. So thank you very much for being here today.
Thank you very much, Ariel, for having me, and thank you for listeners. I know you have a choice to what to listen, so thank you for listening and allowing us to share our passion for the future of money with you all.
Well, I'm sure they're going to learn a lot from you. Today, I mean, it's only half an hour now, and I know that you could speak about these topics for hours and hours, but wanted to start by asking you something like very simple. What's going on in the crypto industry? Because we all see the news now, what's happening in the media, and what the media are reporting about this industry. So, what's happening? What's going on?
Yeah, so it's a good question. I think for anybody who's been even minimally following the crypto industry, especially the last November and December 2022, will be seen as a almost catastrophic event in the industry. Of course, there was a couple of major events that happened throughout the second half of 2022. The collapse of the hedge fund 3 Hours Capital, even lending platforms like Celsius and Voyager, but definitely the collapse of FTX in November of 2022 was a major event. The equivalent of it would be, imagine if in the financial world that we have today, a bank that is too big to fail almost, like Citibank or JP Morgan, would go down. And of course, this had a lot of impact on the broader ecosystem. Of course, the obvious things like contagion or other players that had exposure be impacted by it. But I would say the biggest impact that it had was a loss of trust. Trust not only between the users of the community, but also between counterparties in this ecosystem. Thankfully, actually, things have improved since then. I would say from early mid-January, we started seeing now again some of the volume, the activity in the markets, and driven by a couple of reasons. A part of the macroeconomic factors are really driven by kind of an understanding or a hope that some of the bad events are beyond us, right? So, for example, the contagion now has been more or less contained. There's some pockets of still risk in different places, so we can talk about that. But really, it's been like understanding of what has happened, what is the situation today, and kind of more confidence on the future of crypto. It's very important to understand that what happened with FTX was the collapse of a centralized and regulated, by the way, player. There's nothing happened with blockchain, nothing happened with Bitcoin, nothing happened with Ethereum. The technology continued to operate completely as it should. And so did also a lot of the protocols like DeFi, decentralized finance, continued to operate exactly as it should. So I think it's been a very interesting not a wake up call, but also proof one more time that technology did what it should to do. And actually, ironically, the failure in this case were some of the centralized players that were actually regulated, which was something we talk a lot about as a way to bring more trust and better risk management to the sector.
Mhm. Well, following what you said now, many things came to my mind. You mentioned this loss of trust that happened as a consequence of FTX. And well, I wanted to ask you as well about how to regulate these areas, no? Because if I'm not mistaken, and I know that you started as a lawyer, same as myself, so we come from this regulatory background. And well, some people said that many mistakes were made, no, in FTX, even before with the case of Terra and Luna. So, given that cryptocurrencies are supranational and regulations are national or tend to be national in most cases, what do you think is lacking, is missing when it comes to regulating cryptocurrencies?
Again, or I think it's a very good question. As you mentioned, I'm a lawyer by background, but also had the privilege, previous to launching this hedge fund, I used to be the global crypto leader at PwC, and in that role, obviously, I had the privilege of not only writing, drafting, but reviewing and working with many regulators and regulations and policymakers around the world. And I continue to train to this day many regulators who are entering the crypto space. Let me be very clear at the start. I believe we need regulations in the crypto space. There's no doubt about it. And actually, I would argue the crypto industry, to the surprise of many, is one of the few industries that actively lobbies to have more regulations. And the reason is very simple: is we want actually rules that we can operate with. We want a level playing field. We want to be able to operate like legal businesses, be able to open a bank account, hire people, get visas, and so on and so forth. Now, of course, a crypto by its nature, not only as a new asset class, but also its global nature, is very difficult to regulate. I think what we're going to evolve over the next, and there's been numerous attempts, if you look from a country perspective, from a policy perspective, things have changed over the last couple of years. In my latest book, the Book of Crypto, I kind of give the history of that. But if you think about it, some countries initially took a very negative stance to crypto. Some still do. China is a very good example. Arguably, India is another example. The vast majority of countries took a neutral approach, which is basically, if it looks like a security, we regulate it as a security. If it looks like a commodity, we regulate it as a commodity, and so on and so forth. So a lot of big countries, I would say the majority, were in that neutral bucket. And then you had some countries that really opted with taking this really proactive, sometimes positive, but proactive stance on regulating the crypto industry. In the early days, we had smaller jurisdictions like Gibraltar and Malta. Then it moved on. Probably some others are like Bahamas, to now more maybe, let's say, others like the Dubai and others, Abu Dhabi, Singapore, Switzerland, who really has tried to become crypto hubs. In the case of Dubai, for example, they set up the world's first crypto specialized regulator, a regulator whose sole job, 100% focus, is on the crypto industry. So there's been different approaches being taken. Which one is the right one? Time will tell. But for sure, the regulations are here to stay in crypto. The future that I envision from a regulatory perspective when it comes to crypto is one with centralized players, crypto exchanges, crypto custodians that are centralized, that will be regulated by various regulatory regimes, around the world. But also there'll be in parallel this whole world of centralized finance that would also operate by its own regulations. But the regulation, instead of being drafted by policymakers on pieces of paper, will be basically code. And actually, the code is law, and the code will govern those transactions. And similar to traditional regulations that are available to anybody to see, online, this code will be also available for anybody to be able to read and inspect and do what they want to do with it. So I think the crypto regulations are here to stay. The form and shape that they take may differ, but I think this is very positive for the future of the crypto industry. We need regulations. There's no doubt about that.
No, I fully agree with you. I think this sector needs to be regulated in order to create this level playing field that is very much needed in this industry. And you also mentioned before trust. So I wanted to ask you, we've been seeing these last few years many traditional banks and other traditional financial companies jumping into the wagon of cryptocurrencies, starting to invest in crypto, to offer crypto products. And of course, whenever this kind of events like the FTX crisis happen, certain people tend to think whether they did right, these banks, or not. So how do you think the laymen can regain their trust in the crypto industry? What would you suggest in that sense?
I mean, they will be, of course, now we're in a difficult period, right? But for sure, trust will come back in the crypto industry. And I think there's various ways this is going to happen. One of them is really by, they're having more regulations and being more oversight of the space. Again, I think it's very important to understand that what happened to FTX, based on the information that is available today, it looks like it was a straight up fraud. FTX could have been an exchange where they were selling books, could have been an exchange where they were selling tomatoes, sports card. What happened here was an old school example of whether you call it using client funds, whether you call it Ponzi scheme, but this is fraud, right? And by the way, fraud is very, very difficult. It's easy in 2020. In hindsight, it's 2020, but it's very difficult to do so when somebody's cooking the books. And we've had numerous examples from Madoff in the traditional financial world to the Enrons of this world in public listed companies. So I think that's one thing to understand. I think that's becoming more and more clear. People realize actually that nothing wrong with crypto. It was just one of the big players that was purely fraudulent from that perspective. So I think that there will be more centralized regulations. There will be more centralized players that will make it easy to understand for everybody as well. And then obviously there's some of the impact of time, right? People will kind of become and get recovered from the shock. But I think the most important thing that would really regain trust in the space is increased education and awareness. It's people listening to podcasts like yourself, Oriol, where they get to understand what are digital assets, what is blockchain technology, what is Bitcoin, what does it work, what is an NFT, what is a CBDC. And I think, like anything else in life, if there's something you do not understand, you are afraid. You're worried about it, you fear it. But as soon as you understand it, you actually may still not like it, but at least you understand what it is. My message has always been to regulators, to central bankers, to CEOs of public companies, to boards of big financial institutions, is that you may like Bitcoin, you may hate it. You may like crypto industry, you may actually think it's a massive scam. But I think you have this moral, intellectual, and also I would argue in many cases fiduciary duty to at least spend the time, the intellectual time to understand what it is. And I think then you can make an informed decision. I've been in crypto now since 2013. I organized my first Bitcoin event in Hong Kong in January 2014. At the time when I was trying to learn about crypto, it was actually very difficult. There was not the same amount of resources that you have today. I've been teaching crypto in university since 2015. I can tell you 2015, I didn't have any material to give to my students to read. It was very limited. Right now, it's never been easier for anybody to come and learn about the topic. Even myself, I have online courses on Udemy, for example. I have a 90-minute course for financial services professionals. I have books like my latest book, The Book of Crypto. I have audio books. I have a lot of videos on YouTube, like similar to you, for people to understand. So again, my message to anybody is this weekend on Saturday morning, instead of watching this stupid Netflix video or wasting your time on TikTok, where actually maybe spend that time reading about the future of finance, reading about the future of money, and then you can make your own decision, but at least with the right level of knowledge.
I fully agree with you. First of all, I wanted to say to my listeners that your book, the Book of Crypto, is actually a great book, same as all the materials that you produce. But I fully concur with you. It was much more difficult a few years ago to learn about these areas. I myself got first exposed to crypto and DeFi in Hong Kong as well back in 2015, thanks to a friend of mine who studied the MBA with me. And yeah, I remember that back then it was quite difficult to gather information. It was mostly what this friend told me and some information that I could gather online, but much of that was not that reliable. Now it's much easier because people can check your books, your podcast, my podcast if they want as well. I mean, there are like so many materials to choose from. So it's now I think it cannot be justified now that people invest in these areas without trying to learn first what they are doing now, because the means for them to do so, to learn, exist. So it's all about trying to educate more and make people aware that these resources already exist.
Absolutely. And I think also the crypto community as well. When I give these talks to the people in the crypto community, actually, I think they have a role to play as well. It's funny in crypto, like other industries are niche. We have a lot of our own terms, from HODL to Lambo to the moon, and other, even in crypto Twitter could be quite a unique venue as well. I think the crypto community as well needs to do a better job in becoming more welcoming, right? For example, I've been really being the bridge between traditional finance and crypto ecosystem for many, many years. Literally, I mean, the early days, I remember times where I used to get booed on stage when I used to talk about KYC AML is needed in crypto, right? In the same way, I remember being literally kicked out almost on meetings of financial institutions because I used to bring up a topic of crypto. So I think we need to do as a crypto community be a better job of being more welcoming, and actually not immediately rejecting traditional finance, like being these bad wolves that are there to eat the sheep. I think in many cases we need to have also spend the intellectual time to try to welcome and learn also from traditional finance. I think one thing that has become clear, and I recently published my 2023 crypto predictions, was actually we're going to see more and more of the best practices of the traditional finance world enter the crypto world. And I think that's a great area where probably we can have the both ecosystems maybe not fall in love together, but at least cooperate and collaborate more than we're seeing it today.
Mm. Well, I actually wanted to ask you about your predictions later, no, but I had a similar experience to what you said now, no, this experience of talking to banks and bringing up the subject of DeFi and feeling like you were almost going to be kicked out from that meeting room just because you brought up cryptos or DeFi. And well, I think it's possible now to breach both worlds, but I think it's difficult. It's difficult and requires like an effort from both parties because sometimes in the crypto industry as well, I've noticed many people who automatically like reject the idea of traditional finance, the idea of governments, regulations. So that makes things difficult as well. I'm not saying that it's only their fault. No, I think there are many things to work on. So how do you think the worlds of traditional finance and DeFi, the crypto industry, could and should work together? Like, how do you foresee their collaboration now and their future collaboration?
Yeah. I think, first of all, there will be a time when we look at this, maybe it's in 10 years, 15 years, where actually crypto and financial services will be one. In the very same way that literally 20 years ago, people could have a store and there'll be an e-commerce department or online sales and it'll be completely separate, and now obviously it's all put together, right? So the same thing will happen in traditional finance as well. I think there's a couple of things. I think there's a message to the I give to often, I think, in any financial institution, the change will happen either at the very top or at the very bottom. What I mean at the very bottom is today, if you're a young fresh graduate, you're a young analyst at an investment bank, my advice I give to a lot of my students on this topic is make it known that you like crypto, if you like it, actually, of course. Put on your desk a book about crypto, talk about it. It's because it's guarantee you your financial institution will get it to crypto. And when it happens, they will go to whoever in the organization knows this topic and they'll come to you. But also, my message is often to people at the very top, because unless you create this atmosphere where you, as a leader, you are intellectually curious, you are pushing your team to innovate, and you are pushing to do the right thing from an intellectual, fiduciary, and moral perspective to try to understand this technology, it's going to be very difficult to have the rest of the organization follow through. And I think this is often my message when I speak to CEOs and people at the very top is, maybe it's not the right thing for your organization, but again, it comes back to what we were saying before. Make sure that you're making the right decision with the right level of education internally. What I normally spend less time on and is people in the between. What I found in my experience is that if somebody has a comfortable job, they're doing it 9 to 5, they have their 3-4 weeks vacations, a pension, they're going to retire in 4 or 5 years. Why would you change rock the boat? If you have a high-paying job in a bank today, you're doing even an industry that will disappear, whether it's custody, for example, or even a professions like you're an accountant or auditor, professions that will radically go through transformations, even lawyers, right? Or you're a compliance department at a bank. Why would you bother going through the change, right? It's better to keep the status quo. And I think that's the area where completely I don't personally even bother wasting time. I think organizations will not change. I think on a professional, personal level, for the people in that, in that permafrost that we call it within financial institutions, I think it's wrong, because not only within professionally you're not going to grow, but we often underestimate the market of inefficiencies in finance and other industries, still quite broad. Case in point, we still use letters of credit, we still use fax in trade finance, for example. You have financial institutions in 2022 to 2023 that still send faxes, they send letters, which is absolutely incredible. Myself, I'm in Dubai right now. Citibank, reached out to me yesterday because saying, we have issues with people who are working in crypto. And my answer to them was like, well, you have no problem giving credit cards to people who are selling real estate, doing other jobs. Why crypto? Like, these are regulated industries, especially in Dubai, right? So I think, but again, that person doesn't care. We'll do his job at 5 o'clock on Friday. We'll go enjoy the weekend with his family, right? So that permafrost that you see will unfortunately exist everywhere right now, and will be the case for some time.
It's interesting that you brought up the topic of trade finance because that was actually one of the topics in which I was working. I published some papers in journals in Europe and Asia about blockchain in trade finance, trying to explain how these blockchain-based platforms, like the eConnect platform in Hong Kong, for example, and in many others,
Yeah,
can actually
yeah,
help the industry become much more efficient, because we are talking about a very paper-based industry nowadays, which depends on faxes and these kind of technologies
Incredible.
that are quite old and not that efficient, nowadays in 2023. So it's interesting that you brought this up, and
It's
you were
incredible, Oriol. So, sorry to interrupt, Oriol,
no,
but I
no, no,
mean, I
please,
think
please.
the trade finance industry, and I would say broader, the whole bill of lading, the whole international trade is for me always the example of why incentives don't align. For example, you think how ships, where people put containers on ships, it's completely inefficient. It would be a case study, but well, the incentives are not there, right? If you're a broker, you just want to fill up the ship, sell it out. If you're a guy working at a bank, and the fact that you're still receiving fax is unacceptable, right? But that's the way it's always been. For me, the one answer I always said, if anybody gives me this answer, they're fired on the spot. Is it's when somebody tells me it's always been like this.
Mhm.
That is the answer. If you're a leader and you're literally not firing people or making sure that those words are never mentioned in your organization, that it's always been like this, you're doing something wrong. And trade finance, I mean, Oriel, as you know very well, is I find it unacceptable. And there's many other industries like that, by the way. I would argue many fields of compliance, of risk management, finance are completely outdated. Not because of we don't have better technology or better tools, often for the people because of the people that are there and the lack of incentives for them to change.
Indeed, indeed. I wanted to ask you like three more things before wrapping up. The first one is kind of related to what you said now about well, Citibank saying that they didn't want to open these accounts, for people working in the crypto industry, and it's regarding this urban myth that there tends to be a lot of illicit activities in the crypto industry. If we actually read all those reports, for example, from Chainalysis and these kind of firms, we see that the percentage of illicit transactions in the crypto industry compared to the total of transactions is actually very low, and it keeps getting lower and lower the more people become part of this market. So what would you say to those people who still believe in that myth that cryptos are mainly used for illicit transactions, for frauds, for scams?
Yeah. I think in the early days of crypto, 2000, 12, 13, when Silk Road, yeah, crypto I think was being used predominantly for gambling purposes and nefarious activities. It just has changed radically today. My advice I give to anybody is if you are looking at doing something illegal, you're looking at buying drugs, launder money, evade taxes, do not use Bitcoin. You will get caught. I mean, as you know, Oriol, I mean, the crypto transactions are 100% traceable. If you're looking at doing something illegal, you're probably way better off using good old cash, which is generally not traceable from that perspective. Or what the good old lawyers do, setting up offshore companies, trusts in different jurisdictions, or using diamonds and gold and stuff like that, right? So what I found very amazing for me is that, like you said, the total amount of crypto coming from nefarious activities, broadly defined, is less than 0.25%, right? And it put data for last year, it was in absolute terms $10 billion. I mean, to put things in perspective, in the traditional finance world, it's estimated that anywhere from 2 to 5% of global GDP is being laundered every year. That's 800 billion to $2 trillion a year, right? So I think it's not even. I think you can launder probably like a couple $100,000, maybe a couple $10,000, maybe a million in crypto. But any significant amount, especially if it's a public event, it was a hack or anything like that, you're not going to be able to launder it. And we're seeing that, by the way, as we go along. So again, my message to anybody who thinks that is to once again spend a couple of minutes reading about crypto, understanding what it is, and I think then you can make your own decisions of what it is. I actually believe to the even at fortiori, if you think about it, that one of the biggest uh, dangers for crypto is that it is too transparent. Today, Oriol, if I send you a banking wire via Swift, for example,
Mhm.
let's say from my business to your business, actually it's pretty private. A part of the bank, nobody knows that the transaction took place. Um, Imagine if we're operating in a crypto economy where you give me your public address and I pay you in stable coins, for example. Somebody that finds out your address could reverse engineer your business, could literally reverse engineer your financial statements. And I actually believe that one of the problems we're going to have in the foreseeable future is the fact that cryptocurrencies are too public. And actually, we're going to see the limitations of that because of these reasons. And I think that one day, I think that we have a big topic now around privacy coins. I personally, at this stage of the growth of the crypto community, I'm actually opposed, not opposed, let's say I'm not, in, I don't encourage privacy coins actually. But I really believe there will be a time in a couple of years where I think there'll be a whole debate where we say actually maybe privacy coin is something we should consider because obviously it provides the same level of privacy and payments that we have in traditional finance, and we can have it in the crypto space on that perspective. So definitely, if you're looking at laundering or doing something illegal, do not use crypto. But I also to them at the same time, this transparency that it provides, which I think will help its adoption, for the first billion users, will maybe one of its drawbacks in the medium term from that perspective.
I think everything you said now is actually very interesting, and it's what you said. No, I mean the most non-traceable means of payment remains cash, and it will be so, I think, forever. But also there are many other ways, for people to do illicit activities, and crypto doesn't seem to be at all like the most suitable one because of everything that you just said. And then following this, I wanted to ask you about your crypto predictions for this year. I know that your crypto predictions are actually one of the most expected things for your followers, every year, because you are usually spot on or pretty much always. So, what are your predictions for this year?
Yeah, so as you mentioned, I've been doing this crypto predictions since 2015, and I have to say I've been pretty much, generally quite on good. I mean, I didn't predict the FTX collapse, so I think that change a lot of things for last year. But I think let's say two out of three, and people can find this on my LinkedIn, on my Twitter, and it's published there. But I would say some of the things that I'm watching now is, for example, some of the best practices of traditional finance that will enter the crypto industry. There's a lot of things that we have in TradFi, from SOC reports to IAC reports to AUPs, agreed upon procedures, to even financial audits that I'm hoping will become more mainstream on this in 2023 in the crypto industry. And I think we'll have a kind of a gap between the players who are implementing as best practices and the ones who don't. And I firmly believe the ones who do will benefit from a business perspective. On the topic of CBDCs, I expect to see increased acceleration on this topic. Today, as you know, around 90% of central banks are looking at the topic. I expect, we have countries like the Bahamas, Nigeria, or China that are live. I expect really the activity in the space to really, really accelerate. This is if you're a central banker today and you're not using this time of fear and disdain of cryptocurrencies like Bitcoin and some of the events that took place to accelerate your efforts, I think you're missing an opportunity. I think there'll be massive backlash against CBDC potentially, especially when it comes to privacy towards government in certain countries. But I think that's something that will be hopefully more debated this year. And maybe another one that I think we'll see more and more is the usage of stable coins. Really, what's been happening in the last bear market that we saw in the second half of 2022 was actually normally whenever we went to the bear market, we would see a flight to quality and people would move back to Bitcoin. But right now, actually, if you look at Bitcoin's dominance, towards the end of the year, let's say on early Jan, was around 40%, compared to 70% in previous bear markets. And really where we saw a lot of flight to quality was in stable coins. So I think we're going to see a lot of that happening as well. And then there's other things, I expect to see Ethereum dominate in 2023. I think it's going to be difficult for other layer ones to really gain a trust of users, especially after what happened with the association risk of Solana and FTX. I expect more regulations, which should not be surprising. Maybe couple other things is also like I think DeFi. We mentioned at the beginning of this recording, DeFi, despite all the problems that we saw in crypto last year, DeFi operated perfectly well, did what it should do. So I think that I expect to see more activity there, especially from even some regulated players, traditional financial players, on that perspective on it. And maybe I'll finish it off with, I think I expect to see topic of metaverse becoming definitely more mainstream. I think every Fortune 500 company will have a kind of this metaverse strategy. Yes, a lot of it will be marketing, will be window dressing, but again, this is another step forward, not only in only the metaverse, but also the broader Web3 ecosystem. We know we're having a lot of activity with NFTs, with bigger debates around Web3, especially in certain verticals like gaming, for example. And I expect this to be catalyzed in the year ahead. So I'm very excited about the year coming. I think it was a very difficult period. I think the FTX debacle is hurting, and will continue to hurt the crypto industry, by the way. But I think that there's at the same time I'm amazed by the level of activity going on in different area verticals of the broader crypto ecosystem, and that again for me makes it even more bullish than ever on the future of the sector.
Well, thank you, Henry, for sharing your predictions, which, as I said, are always spot on. And before wrapping this up, I just wanted to ask you one final question. It's about your company. I mean, as far as I know, you moved from Hong Kong to Dubai and you founded Nine Blocks Capital Management. You used to work at PwC as their global crypto leader, but now you are in this project of your own. So I wanted to ask you, uh, what's exactly your company? What are you doing? You could share this with my listeners.
Yeah, Blocks Capital Management is an institutional grade, market neutral crypto hedge fund. So our goal was to really build a leading asset management industry. Basically, our thesis is that a lot of institutional investors, pension funds, sovereign wealth funds, from family office to fund of funds, want to enter the crypto space. They may do equity investments, VC investments, which are easy, but it's often more difficult for them to hold Bitcoin or crypto on their balance sheet. And often the way they would operate is to invest in managers who have the experience and expertise to look into this. And gradually, over the next 10, 15, 20 years, they'll bring this expertise in-house, similar to what happened in the VC world, the PE world, for example. Our strategy, is obviously we're backed by a large Hong Kong hedge fund called Nine Mass. They put the first $75 million in the fund, and we're a market neutral fund, which means that we try to generate alpha regardless of markets going up and down by leveraging some of the inefficiencies of crypto markets, using a range of strategies from basis arbitrage, funding arbitrage, cross asset, cross exchange. So really, the idea is that regardless of markets going up and down, we're able to deliver these consistent returns. And we're obsessed about being regulated, being putting in place best practices, operational due diligence, and trying to lead by example of where we believe the future digital asset manager will be, and we try to kind of pave the way from that perspective.
It sounds great, and I wish you all the luck with this new endeavor of yours. And well, we are unfortunately reaching the end of our episode. I would like to thank you, Henry, for your time and for sharing all these very interesting insights with my listeners.
Thank you very much, Ariel, and I really let's continue with the great work you're doing from this perspective. And thank you for everybody listening again. If you want to follow my work, it's at Henri Arslanian, Henri Arslanian, Arslanian. I have a LinkedIn page, Twitter page, YouTube page. I have a lot of online courses. I have my books, like you mentioned. Thank you very much for having me, Ariel, and thank you very much for having the show and for everybody for allowing us to share our passion of the future of money and finance.
The pleasure is mine, Henry. And well, as you said, please follow Henry because all his books and podcasts and everything he produces is actually very interesting, very enlightening. So please follow Henry as well. And thank you very much for having listened to this episode. And please stay tuned for the next ones. See you soon.